Hi guys, today I will be teaching you how to trade the markets using the multi-time frame analysis. Before doing so, I would like to remind you our web course, which is Learn how to trade financial markets with indicators and techniques unique in the world of trading, which has been published on greenfair.com, where you will find more in details our technique to trade the market, also using the multi-time frame analysis. What we have here is the Australian dollar against the US dollar. As you can see here, I have a multi-time frame analysis with 4 windows. The first chart is a weekly one, so every candle is a weekly one. The second one is a daily chart. The third one is an intraday chart, so 4-hour chart. And then we have, rather than the Australian dollar, US dollar, we have the New Zealand dollar against US dollar on a daily basis. And I will be explaining to you later on why I also want to see what the New Zealand dollar is doing against the US dollar. Let's start analyzing the first window, so Australian dollar against US dollar on a weekly chart. In the first section of the chart, you see the naked price with no indicators, while beneath you can find the CCI, okay, the commodity channel index at 66 period. So the reason why I'm not using the 14 or the 21 period is because I want to get rid of the noise. Also, rather than using 100 and minus 100 at the two default thresholds, I do prefer using 200 and minus 200 since I want to actually visualize more extreme data. Okay, so what do we see here? After a prolonged period of downtrend, we've seen a strong period of rebound, okay, with a V formation. So right now we are in an uptrend. So the weekly chart, just using the price action, is telling us that the trend is up, okay, since the price is moving up. Now, if we use the CCI before, okay, triggering any long or any short, we want to have the CCI crossing, in this case, above the zero line. So for longs above the zero line, while for short crossing below the zero. Okay, so right now we can say that the CCI for the weekly chart is positive and it is above the zero, yet has not reached, okay, any of the threshold, so we are not close by to the 200 threshold. Okay, so again the CCI is above the zero, which is a positive signal on a weekly basis, and as well is not close to the plus 200 threshold. So now let's move. So here we have a buy signal, okay, for the weekly chart. Now let's move on and let's try to understand more in details, okay, what is happening on a daily chart. So on a daily chart, what we've seen here, actually, if we analyze the CCI, we've seen the line actually hitting the upper threshold. Again, here I set up 200 and minus 200 and 66, okay? Again, 66 because I want to get rid of the noise, because with the 14 period or a 21 period, we would have a zigzag, okay? So we would have more signal, while I want to have just the most reliable one. Okay, so right now what is happening? The price is moving in horizontally, which means it might break up above, okay, this area, which is above 0.70. Okay, so a break above 0.70 would project the price at least till 0.72. And why I have this projection? Because you know that you should sum up the difference between these lows and these highs, creating the rectangle. So we could, if we break above 0.70, we are going to test 0.72. So what is the CCI is telling to us? The CCI is above the zero, okay, which is another positive signal. So even from the daily chart, we have a buy signal. Okay, so weekly chart is a buy, daily chart is a buy. What we can retrieve from the CCI is that the cycle, okay, is moving downwards. So we should keep attention. So the CCI is an oscillator, okay, which means it moves in this case between minus 200 and plus 200, or if you use the default CCI, it moves from plus 100 and plus minus 100. But the most important thing is that Australian dollar against US dollar is a trendy pair, which means that pair tends to move in a trend. So once we see the CCI hitting the threshold plus 100 or plus 200, for a while we should be expecting the price going forward to that direction. Okay, so here what I should expect now, once we will see the CCI moving again, okay, so the derivative of the CCI being positive again, actually we will have a very strong buy signal. So the weekly one is a buy, the daily one is a buy, but we see that the CCI is moving towards the zero line. So we will see the test of the zero line, and then if the CCI will move again, okay, if the derivative is, if the curve will move upwards, then we will have a very strong back signal, and we should be expecting actually a breakup above these levels. Okay, so strong buy here, a buy here. Again, let's wait a little bit before triggering a buy, because in this case the price is moving horizontally and we want to be sure that we are trading the right direction. Okay, Warren Buffett was saying that trading stocks, in his case stocks, is a way of transferring money from the impatient to the patient ones. Okay, so even for Forex, even about Forex, is a matter of be patient. Okay, so again, here as we can see, as we have seen here, we have a cycle. Okay, we went from minus 340 to 200, so now we might see a movement, okay, a period of weakness. Okay, yet if we see the CCI moving again upwards, okay, if the slope, which is around right now negative but yet above the zero, if the slope will be moving, will be orienting itself upwards, then it will be a very strong buy signal. Now let's move to the 4-hour chart and let's see what, again, we have an intraday, so 240 minutes of 4-hour chart, and let's see what the CCI can tell us. First of all, in terms of price action, we see some reversal being bought. It seems that the price tests this area 0.6920, and from there we have seen a rebound. Right now the CCI is still above the zero, okay, so it's in the positive part, in the positive side of the Gauss curve, okay, but we see here 2 point of highs. Okay, so if the weekly chart is extremely positive, if the daily chart is positive, even the 4-hour chart is positive. So right now we should be expecting, so the probabilities to see the price going higher are actually much more than the probabilities to see the price going lower. This is because of the multi-time frame analysis. Yet before triggering along, as I've been saying before, we want to see the slope of the CCI orienting itself, okay, upwards. Now let's move to the final window, New Zealand dollar against US dollar. This is a daily chart. Why? Okay, with no indicators. Why I've decided to put here to display New Zealand dollar against US dollar rather than Australian dollar against US dollar. The reason is because Australian dollar against US dollar and New Zealand dollar against US dollar have a very similar tendency. Okay, so they are highly correlated. For the 95% of the time, they move in the same way. So if I would experience here a breakup above this level for the New Zealand against the US dollar, I do believe we're going to see the same for the Australian dollar against the US dollar with a 95% of probabilities. Okay, so the intercorrelation is always a great method to understand, to try to forecast the future. As we all know, we cannot forecast the future, it's a matter of probabilities. Yet, if one, and of course it works even for the New Zealand dollar against the US dollar, if the Australian dollar against the US dollar will break above this area, above 0.70, I do believe we are going to see the same movement also for the New Zealand dollar against the US dollar, again because of the high correlation which is between Australian dollar, US dollar, and New Zealand dollar against US dollar. So again, guys, right now the probabilities to see that the Australian dollar against the US dollar moving up over the next weeks is higher than the probabilities to see the Australian dollar moving down against the US dollar. Yet, I don't want to trade right now long Australian dollar, US dollar, and the reason is because I see that the CCI for the daily chart is moving downwards. Okay, the slope of the CCI is right now negative. Why I want to see something like that before trading? Okay, as you can see here, while the slope of the CCI is positive, we have experienced the movement up for the Australian dollar, US dollar. Okay, again, if the price will be moving horizontally, most probably we are going to experience a new movement up for the CCI, and then we can trigger a long. So as you can see here and now, using the multi-time frame analysis is a very effective way to trade, because you will be trading the trend, okay, and in this way also the cycles. Again, price is moving up for the weekly chart, and the CCI is positive. Daily chart, the CCI is positive but oriented downwards. Okay, so this is a strong buy, this is just a buy, and for the 4-hour chart as well we have this same as well buy. Okay guys, thank you.